Hi there, it is June the 10th, 2021. This is your Vancouver market update with Christian Dy, Latitude West Financial, and Mike Stewart, Oakland Realty downtown. So let's get right into it. Quick little market update with a statistical review over here. Real estate in Vancouver. So all of our stats come from the reportings in May. So in May 2021, listings were 187% higher than the same time last year, but they were 13% decrease from homes sold in the month prior. Now, when it comes to pricing, analysts have always said that sales prices are trending downward when the sales to listings ratio is below a 12%, but they are trending upward when the sales to listings ratio is above a 20%. So in March, the numbers were very, very high above the 20%, 52 for detached homes, 79 for townhomes, 65 for condos. In April, still north of 20%, 37 for detached homes, 70 for townhomes, and 51 for condos. Now, in May, what we notice over here is the numbers have declined, but not, so the numbers have gone down, but that doesn't mean the prices are going down. Because remember, when the price when the sales to active listings is above a 20%, then we still know that the prices are trending up, even though the numbers of the sales to active listings have slowly gone down. So what is our conclusion over here? The real estate market in Vancouver will continue to rise in 2021. That's our conclusion over here. Okay.
100%. Yeah, I
Yeah,
totally agree.
and the forecasters, Canadian Real Estate Association has predicted this. So has Remax, so has Royal LePage, and they are, of course, showing that these signs are correct. So Mike, I'm going to basically turn this over to you and ask. You're on the front lines of real estate. What is happening with activity, buyers, and sellers?
Yeah, I broadly agree with everything that you were mentioning just now, and we're seeing the same thing. We're seeing sort of an easing of the intense activity that we saw in the earlier part of the year. It still is a seller's market, and there are buyers out there, and interest rates are still, you still can get a 5-year fixed rate mortgage under 2%, which is fantastic and so low. So we're seeing good market action, and it's actually almost a perfect market. Here's why. For buyers, there's lots of supply out there because sellers know that they can get a good price for their properties. For sellers, it's good because they can get a good price for their properties if they decided to wait. And it's not as an intense and overwhelming experience for both sellers and buyers, because if there are multiple offer situations, you're not seeing situations where it's like 10 or 15 or 50 offers. It's 3 to 5 offers, and 5 if it's something really, really hot, or maybe 8, but very, very rare, and only for something that's priced really aggressively. So yeah, it's a good market. But again, Christian and I were discussing the real estate market across British Columbia and across the Lower Mainland, across the province, is made up of micro markets. And I mean micro markets where, if you're talking about the city of Vancouver, what's happening in downtown condos over $1 million is going to be a totally different situation than what's happening with single family houses in East Vancouver or single family houses on the west side of Vancouver. And that's because the people who are buying them are in totally different income levels and have totally different goals. We're still, in terms of high density urban properties, we're still having the hangover of COVID-19, where people still feel uncomfortable about being in lobbies, elevators, close proximity to other people in restaurants, bars, going to gyms. Like the reason why we like living in dense urban neighborhoods is because we can be around people and be close to people and be near people and be around people. A lot of people are still not feeling comfortable with that. So a lot of high-end special, urban properties are really still struggling, especially over the $1 million mark, $1.2 million mark. But I think that's going to change dramatically. And what's going to do that is the borders reopening. We got 185,000 new people in Canada in 2021, or it was 2020. But that's a low number. And that's basically just taking all the people who are here in Canada. Was it 2020 or 2021? Basically, it's all the people who are here in Canada who are like foreign students, PRs, other things, where they're in Canada, but no new people are coming into Canada because the borders are closed. Once the borders reopen, I think you're going to see a big surge in urban properties, because when people first come to a new country, when people first come to Canada, they come to the core. They get an apartment as they learn the rest of the city. So they're renting apartments, not necessarily buying right away, but eventually they will. And the people renting those apartments or moving out of those apartments that are getting rented are buying. So I think you're going to see a big uptick in activity, because the federal government has specifically said they want to have 400,000 new people come to Canada in 2022. And that's, significantly above the number that we had before COVID-19, way above the number we had during COVID-19. And, a good portion of these people are going to come to Vancouver, the Vancouver area. And, we're already been running into housing supply shortages, which is, you can see from rising house prices and rising homelessness. And we have city governments across the region who are not really that responsive to the needs of, homeowners and people want to live. They're not making enough rental housing. They're not making enough supportive housing for people with special, with addiction issues, homelessness issues, all that sort of stuff. And they're not making enough market housing, rental housing. There's just not enough housing being built. So you're going to see prices increasing for quite some time. Now we are seeing the stress.
Right. And then right now over here, tell me a little bit about that pricing. So are you saying that we're in an environment right now where we still have to hit asking, or we got to go over asking, or is it even possible to do anything under asking right now?
You can get stuff under asking if it's a property that isn't perfect. So it doesn't, it's priced, it's overpriced, it's messy, it's dirty, it doesn't present well, it's difficult to show. That is going to be a prime property where you can negotiate price down. You absolutely can. We're in a situation where you've got a tenant who's uncooperative with the sale, doesn't want to show the property. You're going to easily be able to get more. You're going to have a lot more negotiating power as a buyer if your competitors, i.e. other buyers, can't get in and see that property. Or if it's messy and you can see beyond that, you can do really well in this market.
Tell me about this negotiating power. Like if you go in right now, and you do we still need to go in with no subject to sale, no subject to inspection, or you think that environment's done as well?
Subject to sale is a challenge in this market. If you can do subject to sale on properties right now where they're ugly, messy, dirty, there's something wrong with them, or they got a bad tenant. But if it's a beautiful property with lipstick on it, don't bother with subject to don't bother with subject to sale. If you've got something that's beautiful, it's presented well, it's priced really well, it's priced aggressively, you probably may still have to go subject free. You probably will be competing, but you're not going to have to go as crazy as you were before. But the key is, if you're going in subject free, do your due diligence before. Get the home inspector in there. Read the documents. Get the information on the property to your bank. Be safe when you're doing that, because there is risk with that process.
No, I do understand that. It's interesting because I'm dealing with clients who are, sometimes some of the clients have gotten caught. They had to get with an aggressive offer. So they made dates that didn't really match. So they're either homeless for a couple of months, or they're carrying two mortgages for a couple of months over there. And I'm sort of wondering, is the seller right now kind of, are you a little bit victim to get a more aggressive offer? I know this one guy, he ended up getting a subject where he was trying to, he basically said, even though, he basically tried to close within 2 weeks, just because his offer was taken, even though it wasn't the highest offer, just because he was able to close a little bit faster. Do you find that environment is going on?
Totally. And, no matter what the market is doing, if you're a buyer, one of the most important things to do is to be prepared. Because if you're prepared as a buyer, so you've talked to your bank, you've got, when you can move, if you're renting a place, when you can give notice, and you know exactly what you can do before you get into a situation or before you get into a negotiation, is going to make things so much better for you. Because if you can say to a seller, look, I have a subject to financing, but look, it's only 3 days because the bank has everything, I've got everything, we're ready to go. That's going to be a lot more attractive. Or if you can say to a seller, I can complete, or I can move in 2 weeks, or I can move in a month and a half, they might take a lower offer from somebody who's more flexible that way, because every seller has different needs, like every buyer does.
Yeah, no, that's great. So tell me a little bit about your thoughts about what'll be happening for the future outlook of 2021. Let's just use the short term in the summer. What do you think is going to happen in the summer here?
You may see some further cooling in the market, and there are basically three reasons for that. One is the fact that when the weather gets better, people just stop looking for property, quite frankly. It's people want to go to the beach instead of wanting to go to look at properties, especially when it gets really hot. Second thing is people are going to start traveling, maybe not internationally, but traveling within the province, going to Vancouver Island, going to the Okanagan, whatever, just going somewhere and going away. So that's going to slow things down. And three, the market is slowing down a bit right now, and that could continue, and it typically does in the summer. So I wouldn't be surprised if it continues to do that, but it's anybody's guess. Another thing too is mortgage stress test could slow things down in terms, later in the summer, but it's difficult to say. But then again, though, once those borders open, things are going to go crazy again, I think. And I think personally, the federal government coordinated the stress test to work with the reopening of the borders, because typically a change in the mortgage rules usually has an effect in about 3 to 5 months after it's brought in, because it's affecting new people. Like the people who are selling into properties right now, they started talking to mortgage brokers and all that sort of stuff 3 to 5 months ago, or 3 to 6 months ago. And so they're already going. The people affected by the stress test are going to be buying typically in 3 to 6 months from now, because they're talking to the mortgage broker now, and they're going to be able to afford less. So therefore, that may slow the market down. But I think, call me a cynic, it's just basically the government's trying to sort of even out. They're trying to slow things down in advance of the big surge of demand for real estate once the borders reopen.
Yeah. Would you say that if anybody still got their home on the market in the summer and it's been cooling down, do you think that now might be an opportunity to kind of jump in without a full asking offer? You might be able to, offer a couple, maybe, 97% of asking around that time, since it's a cooling market?
When there's less buyers around, and when I say cooling market, I mean less activity, but I don't say prices going down.
Yeah, yeah.
Yeah, absolutely. When there are less buyers around and the less competition, it gives the buyers relative strength vis-a-vis a seller in terms of market power and what they can get away with and what they can do. So, if it's, late August and it's 28 degrees and everybody's away or at the beach and nobody wants to look at real estate, and you go look at a house that is maybe hot and, a little uncomfortable and nobody wants to look at it, or they go in and they're like, this is too hot. That's what you want to do. You know what I mean? You want to move when other people are fearful. You want to move, when other people are holding back. That's how you're going to get the best deals.
Yeah. And for a seller, would you say if someone was not in a rush to sell and the activity really started to slow down, not too many people looking at it, would you say to almost maybe consider pulling the listing and have it fresh in September or October?
Yeah, a lot of the times a relist after Labor Day can be a really good way to get, the best, to get a good result, because a lot of people go away up to Labor Day. So.
Got it. Got it. No, this has been really, really good. Tell me, areas in the Lower Mainland. Is there anything that you're sort of saying? If you were to identify a good opportunity right now in this environment for either a buyer or an investor, something of that sort. Is there an area that you're liking right now?
Well, downtown Vancouver over $1 million is slow. But the issue with downtown Vancouver, the issue with the core is your cap rates or your percentage return per year for rent are so low that it doesn't necessarily make sense for investors. Right now, the investors we're working with, they're doing well in places like the Okanagan. Like my real estate, guy I work closely with, business partner in real estate, just bought a house in the Okanagan. He paid $1 million for it, and it cash flows to the point of, I think, $800 a month or something like that. It's got like 3 units in it. The Fraser Valley is really good. You're getting condos and single family houses that are doing quite well, but you've seen significant capital appreciation in the Fraser Valley and in the Okanagan. City of Vancouver, Greater Vancouver, that's a challenge for investors just because the cap rates are so low. Typically what it is, it's a capital appreciation play, and that's how it does best. So yeah, it's a challenging market for investors looking for revenue, but the potential for upside in terms of capital appreciation is huge, because we've got so much population growth, and we've got city governments throughout the region who are not into creating new housing supply.
Yeah, let's, the downtown Vancouver, I know for an investor, it's going to be a pretty big challenge over here. But what about for the guy who says, well, I'm not an investor, but I'm thinking moving to the downtown core, or I'm thinking moving not into the downtown core? Are you saying that there's potentially better deals for somebody who actually wants to occupy the place?
Absolutely. Yeah, owner occupier places over $1 million in downtown Vancouver. There's great options. Just it's quiet. There's just nothing. And if you want to get really good value, you just go and lowball stuff until you find somebody who wants to sell and
Wow.
needs to sell, and that's how you get the best deal, you know?
Perfect, perfect. So over here, I wanted to share some statistics over here. In March, if you just literally look at the 1 month change in Vancouver, look at these numbers over here: 4%, 3%, 3%, 6%, 6, 4, 3. Now, if we just go 1 month forward into April, the numbers start to not too many fours, but a lot more threes and twos and ones. Now, if you look into May, we're in the ones and the twos and the ones. So what is showing over here is, are prices going up? Have prices been going up month over month? The quick answer was yes. The data shows this. But what we're finding is now it's just slowing down. It's still going up, but it's just slowing down. And if we take a look at detached homes versus condos, we're going to see something very, very similar over here. But one thing you don't see is, you don't see the 1 month change being in the negative, and you don't see the numbers being like or zero or anything like that. So
None.
we are slowing down a little bit, and according to
It's
Mike,
just volume.
and I concur as well. What we're going to end up having over here, I believe, in the summer with the reopening plus the summer, is a slowdown.
Yeah.
It might be a great opportunity, especially if you're not a seller and you're a buyer. Maybe you're sitting on cash, or maybe you're a first-time home buyer, right? Like you said, the stress test only really affects, in my opinion, the ones who are at the lower price
Yeah.
point, because now they can't afford much. But a lot of people, the stress test didn't affect them at all, because the amount that they were going to buy is still the amount that they're able to afford. So it could actually be a really good opportunity to keep your eyes out if you're looking at buying into the summer when we get that slowdown, especially if everyone's traveling. I kind of almost feel that if someone is still selling it in the summer, keep an eye on what's out there now. Keep an eye if it's still out there in the summer, and you might get a pretty good deal. So especially if someone is pricing something, and then all of a sudden it says a price reduction, and then it
Yeah.
still doesn't sell, and now you're coming to the tail end of August. I know when I bought my first townhouse about 16 years ago, we saw two places identical. One was just in a slightly better location, but it was about 20 grand more. It
Mhm.
sold, and then I liked both of them, but the one was cheaper. We said, why don't we relook in summer? At the end of summer, that one was still there. And I said, hey, guess what? It's still there. We put in a very, very reasonable offer, not asking, below asking. We ended up getting it. So keep an eye out. Still keep looking for those. Now's a great
100%.
time to start fielding questions over here. If you had a question, now would be a time to put it in the chat, and we'd be happy to field it. But while we're waiting for those questions over here, Mike, I did have another question for you over here. How long does it usually take for the effect of things like stress tests for government change or something like that to really reach its way to the market where we actually feel it? Like, because the interest rates, of course, are also
Yeah.
starting to move as well.
Usually about 3 to 6 months. That's when you start to feel it. But again, the stress test a lot of the times can be a non-factor. Like I've been through it before, and a lot of the times it just doesn't have an effect. Sometimes it does, but it really depends on what's going on in the market. One thing I did want to mention though, for investors, depending on how people are approaching this, is there's one thing that I forgot to mention, is the fact that if you can get a mortgage under 1.75%, or sorry, under 2% in this current situation, and you can get it to support itself or even mildly cash flow is tough, but probably support itself, the amount of principal repayment is absolutely unprecedented and enormous. You know what I mean? And if you're want to invest in the Vancouver real estate market because you think you can do well with capital appreciation, which people have done so often, that's actually a pretty good investment strategy right there. You just buy something, let the tenants pay it down. You know what I mean? You may have to put more than 20% down, but let those tenants pay it down, and then it increases value. You sell it, but you built up tons of equity just by having the tenants in there. You know what I mean?
Yeah, no, it's not a bad strategy. One thing I like about it as well is sometimes people forget about the taxation of it. If I take my, $200,000 to put it in the stock market, there's no tax benefit there. If I take my $200,000 and I have an $800,000 mortgage, the interest rate is deductible. I'm sitting on money that's
Totally.
for the capital appreciation over there. But no, that's great. So what I want to do over here, give a couple of concluding statements over here. I've always said, don't try to time the market. Don't try to time the market. It would be better if you try tried to figure out what you could afford, whether you're buyer or you're seller over here. Market is very, very unpredictable. Like we kind of said, there might be a cooling and slowing. I wouldn't be surprised if all of a sudden there was a big surge and it started to go up, right? Prediction of the market that both of us have reiterated. We do think that the summer will cool it a little bit, especially with the COVID restrictions lessening. But 2021 remains an upward trend for the Vancouver real estate market. We have not seen one single statistic or reason to believe why the prices won't continue to go up. Now, what am I doing with clients over here? Well, if you are a client currently, you know that we are reviewing a strategy if real estate is involved, whether the buying or the selling on investment or personal property. But I'm ensuring that you take advantage in a very, very safe way over here. So a case study example that might apply to you. Imagine if you're a married couple, you own a house, you want to upgrade your home, or you want to take the equity out of a home to invest the property, but you're not sure what to do over here. Well, some of your options. Number one, sell your house, go buy a larger house. That's your investment. Option number two, sell the house, buy a smaller house and invest in another property. Option number three, keep the house, take a home equity line of credit, leverage against it, and use that to buy another property. So really quickly, there is no correct answer without an analysis. There has to be analysis on all three of these scenarios. Now, people are often thinking, it's amazing, Christian. I was just thinking about exactly what you're talking about, but I don't know how to do the analysis. I don't know whether to make it. I'll tell you right now, this is a hundreds of thousands of dollar decision come retirement. You don't want to make a mistake over here. So what do? You get professional help. Now, if you know professional help, then absolutely utilize them. But if you don't, this is what me and my team are able to do. We're able to take a discovery meeting to figure out how we can help you over here. And a quick little note, all of our discovery meetings are complimentary. I'll try to give you as much complimentary information as I possibly can inside this meeting. But if you decide to work with us, I would show you what next steps would look like. So, uh, you know, I'm able to do the analysis to figure out where you would be if you were to have two properties or whether you were to have three properties, Statistics have always shown by using a good advisor, it always multiplies your wealth greater than if you didn't have an advisor at all. So what am I saying over here? If you want to talk, it's a complimentary talk. I'll help you as much as I possibly can over here. This is how to get in touch with me. assistant@latitude-west.ca. I'd be happy to hear your real estate question, figure out your scenario, give you as much help as I possibly can. Now, if you want to join us next month, Thursday, July the 8th, we'll be in the summer, of course, but we want to, real estate changes every single week. We want to give you a monthly update to let you know what the new environment is, especially if you're waiting on the sidelines, either to buy or to sell. You want to keep coming to these. Now, if you're listening to the recorded link right now and you know someone who is thinking of buying or selling, please forward this link to them so that they could listen as well to get this valuable information. You could register for the next workshop at latitude-west /workshops. All right, so I believe that concludes the questions unless there's any last ones, but we want to be able to connect with us. If you want to connect with me at Christian Dy, assistant@latitude-west.ca. And if you want to connect with Mike, we can go get Mike at mike@mikestewart.ca or at 604-763-3136. And a quick reminder, if you did connect with Mike and you wanted to see the full version of the statistics that I've shown today, Mike will be able to provide that with you by giving him a quick email or a quick phone call or a quick text message. But besides that, Mike, thanks again. We'll see you next time, and best of luck for everyone out there.
Thank you, everyone. Have a good night.
Okay, bye now.